Very good morning, friends. Little bit delay in my starting. Anyway, today I'm going to bring out a very calm income strategy using liquid base. I've considered actually the problem of the option buying. Option buying every day you cannot do that. The market since 19th, you got an opportunity for option buying. With my indicators, you could have taken the option buying 25,900 call option. You could have taken around 240 or something, and it has given 480 points. So, this only it doesn't give you every time. For example, if you would have gone for option buying on yesterday and day before yesterday, there was selling was going on both the call option and the put option. You wouldn't have made money. It was the premium decay, it was happening there. If you would have done the option buying, you would have lost money. But I'm going to give you an income strategy using liquid base. Actually, most of the traders, they do not have money. How a small trader can put in some kind of money into the liquid base and get margin benefit from there by pledging the liquid base. So today I'm going to tell you the very safe option selling approach with the help of margin money by uh, through funding through liquid base. It is for beginners and disciplined traders. So you will be very calm, quiet, you will be relaxed. Once you know, once you sell at the proper level, you need not worry. Say, for example, if you would have sold the call option, even in the deep in the money call option and the at the money call option, you would have captured 50 to 60 points without tension, without any entry, timing the entry or risk, everything you could have been avoided. So in this video, I'm going to bring you how you can do option selling in a disciplined way. Why liquid base? Actually, why I'm asking for the margin money, actually it calls for more than 2 lakhs or something. If you want to sell at higher premium, you need a very, very high money. What you can do is you can put the money in liquid base. Say, for example, you have 1.5 lakhs. You can put it in the liquid base, that is 1,000. You can buy those liquid base and pledge that. Pledge that. By pledging that, you will get margin money, 90% of the margin money. So even by pledging your portfolio, stocks or anything, you get money. But the disadvantage in this there is it depends upon the stock. It varies from stock to stock. If it is highly volatile stock, you don't get 100%, I mean 90% margin money. There will be lot of difference between one stock to the other. Apart from that, you will be charged interest rate for the loan. Whatever the loan you get from the broker, it will be start. You will get interest will be charged for that. But whereas if you put money in liquid base and pledge the liquid base, no interest rate will be charged. And apart from that, liquid base sits as a capital, like the money in your SB account. It will earn a nominal amount of interest rate annually. Annual interest rate will be generated. You need not bother, and it acts like a cash and earns daily interest, very low risk. It can be accepted as collateral. You can pledge it. And your capital also stays safe. It is the capital is staying safe, and you are borrowing money, and also what you are doing, you are not getting interest, and you want to utilize that money to generate some income through business. But you need to do a safe business so that you will not incur losses. For example, if you utilize that money for option buying, one day you may get money, other day, if you do not know what is happening in the market, they put the uh, price into a cage, it goes sideways, then option premium will decay, and on that particular days, you are going to lose money. So, to avoid all those things, you can generate money consistently if you do it properly with the option writing. That is credit spread. Here I'm going to combining the getting the money funded, and also we are doing the business safely, generating good income. Let it not be a very huge, but let it be some income you can consistently generate in the market without tension. It is a boon for professional traders. They cannot time the market because timing is very, very important in option buying. Whereas in option writing, you need not time the market. And if you know when the when everything is conducive, if you take the time, it melts, premium melts. So you can take the advantage of that melting of the premium with proper my indicators, episodic pivot as well as rolling pivot, you can enter into the trade. For example, if you have total capital of 1,30,000, if you are buying liquid base one for 1 lakh and you are keeping 30,000 as cash, you will get 90% of the money as from the liquid base. Total capital 1,30,000, 90 percentage you are getting as a loan. So by pledging liquid base, you get 90% of the margin. The margin received is 90,000 and total you can utilize 1,20,000, and the broker will give you comfortably if you do the credit spread, and it will not cost you 2 lakhs or 1.5 lakhs by nominal amount of 60, varying from 60,000 to 85,000, you can comfortably sell the option. It is like keeping the money and getting the loan, keeping gold, pledging loan, and taking the money, utilizing for our purpose. But you are doing the business with carefully, with, to get the money properly, consistently, you are not risking, you are designing a strategy that is option writing, credit spread, you are doing it so that risk will not be there in your business, and you can generate income if you do it very safely. So here you are not going to do any gambling or no naked option selling, no over trading, no expiry madness you are not going to do. See, you have to generate the money. You are accountable. You have taken loan and you have to maintain the, liquid base money. Otherwise, margin calls will be there from the broker. You need to fill the, difference amount for the liquid base. So if you go into loss, you need to pay money. But you're doing it safely. If you do it safely, you're going to generate constant income. So avoid this mistake: emotional decisions, over trading, and chasing losses. Three things you need to do for this. You should not take any emotional decision. You should not overtrade, and you should not, some people, after making losses, they will chase the losses. They think I need to revenge trade. They will go into revenge trade. They will go into the trades again and again so that they will generate money. That is a foolish thing. So, core strategy is you are selling defined risk option spread. Sell one call option and buy out of the money call option. This is called as call credit spread. You can do this. Call credit spread, you can do that. What you are going to do? You are selling an option which has got a premium and buying an OTM option, call option, which is very less to fund to get not only hedging. If you go for out of the money, deep out of the money call option, it is not for hedging, it is for margin benefit only. So you can do this. This is called as call credit spread. You are doing that. Once this is the strategy, after borrowing, pledging the money, after getting the money with the margin benefit, you are going to do this strategy. This is the strategy. You will be safe actually. You will be safe. By doing this strategy, you are safe. Why credit spread is works is you are exposed to limited risk and lower margin. Margin is not very high. You are not paying 2.5 lakhs or 1.5 lakhs. If you would have sell naked call option, you need to pay that much. But you are doing a credit spread, then margin will be lower margin, and you are taking the advantage of the time decay. That will work for you. That is peaceful trading for a professional, not the professional trader who are working professionals. For the traders, they want to earn money, extra money, peacefully without any tension. They can work and also they can generate money. It will be, you are walking very, very peacefully. So instrument selection, you can do it with trade Nifty only. Avoid bank Nifty initially. You do for one lot only. One lot only. So Nifty only you are going to do. Entry conditions are strong resistance level. And you are going to see at the strong resistance level, you are sure of that market is not going to go up. At that time, you are going to do this. Price rejection and exhaustion you are going to see, and you have to see for the structure plus levels need to agree for that. That is your entry condition. See, you are going to sell at the resistance wall, and price rejection you are going to see over here. This was the resistance. Price came over here. You are going to, this is the wall. You are going to take the strategy around this area. Nifty, for example, if you are trading Nifty at 22,000, sell 22,200 call option, buy 22,300 call option. Even you can go deep out of the money. Here in this example, I'm taking an example for hedging. You can go for even for, if you're so sure and confident that market is not going to go beyond that level, you are going to go for still out of the money call option. So just for example, I'm telling you 60,000, it will not be so. It will vary from 45 to 80,000 also. Whatever the margin, for example, you have got a margin, you use only 20 to 30% of margin. You are using only 20 to 30% of the margin, and only one trade per day you are going to do. you will have to define your maximum loss. With defined maximum loss, you are going to do this strategy. So, maximum risk will be 2%. That is the trading route. You are going with the trade with the maximum risk of 2%. So, if you stay disciplined, you can earn consistent money with the strategy. With the money putting into the bank, your capital will be safe and you are pledging that amount and you are taking the benefit, margin benefit. Book at 50 to 70% profit, exit if structure breaks, exit by 2:45 p.m. Like that, you can make rules. Some time-based this thing you can make and you can exit like that. You will get to know once you enter into the trade, you will do that. So this is daily exit rules is peaceful closure. You can do that. Why this works is your capital is protected, and apart from that, you will have calm mindset. Calm mindset is very, very important for a trader to think properly, act properly. Nothing, no panic will be there. No panic in trading. Actually, it is so stressful. Option buying is so stressful. Yes, it is profitable. Not on all days you can enter into option buying, either put buying or call buying, but few days in a month you get an opportunity. You saw that. In Nifty, you can go and check. Only on few days you will get a momentum trade that will be a blast. Even you can hold the call option for continuously 2 to 3 days. That's what happened in Nifty. From 19th, it changed the course until day before yesterday, it was profitable. You would have finished. It started coming down and it was in writer's market. So, it will be a peaceful journey for you. You can expect 0.8% to 1.5% per month plus liquid bees interest. Liquid bees, which is parked in the liquid bees, money parked will generate interest also. You can focus on consistency. So, you can grow your money slow and healthily. Slow and steady, healthy money will grow. You will not be into roller coaster ride. One day making 70,000, another day losing 1 lakh. What is the point? So if you will do that, by the end of this, when you calculate, you will not be generating money at all. Your money capital will be slowly depleting. So this strategy is very good. You can employ this. Golden rule is margin is borrowed confidence. It is not free money. Remember that. Margin is borrowed confidence, not free money. Right? So you have to, when it is a borrowed thing, if you borrow something from your neighbor or borrow something, you need to use it with extra care because it is a borrowed tool. If you do it with extra care, definitely you can earn money. Trade less, think more, let money work quietly. Okay? So, this is the final message. Trust the process, stay disciplined. Let me take you to the chart to show you trading view chart. Let me apply the chart and give you an example how you could have made money with my indicator. I'm taking you to the trading view for the example. and I'm showing you an example how you could have captured the move. Here, let me take you to the Nifty. What happened in Nifty is, let me hide some few indicators. I was checking that indicator. This is my rolling pivot and episodic pivot. I've enabled two indicators. Let me change the time frame to hourly so that you can see very neatly my indicator. See, here the market was coming down, right? Market is coming down. All of a sudden, market gapped up. On that day, both the episodic pivot, bearish and bullish episodic pivot was generated, and this was an opportunity for call buy. Here, after moving higher, the market started, it became exhausted. You can see bearish and bullish episodic pivot, and the market started showing exhaustion over here. With the help of this indicator and also some basic knowledge of three levels of rise, that is Elliott wave, the market always moves three levels. After the third level of rise, the market will start coming down. Using this principle, also by seeing the rolling pivot and the exhaustion, even episodic pivots are generated continuously. Then what I do is I take the midpoint and mark it and move it to the midpoint of everything, the pivot. And you are able to see here the market started, even though this was a trap candle. Market could not sustain and started moving down. Here you could have sold the call, you could have written call to get the premium decay. And very important thing to note is, even though market is 26,200, I'll show you an interesting thing. Even the deep in the money call option, this is the deep in the money call option, 25,800 call option. By seeing the weakness, exhaustion in the underlying, you could have selected this deep in the money call option. And if you would have written this call option on an intraday basis with the help of rolling pivot and the episodic pivot, let me take you to the lower time frame. So you got the sell signal around this area. If you would have written here around 451 rupees, you could have captured almost, it came down to 363, almost 100 points, around 100 points. Easily, by writing this, you could have made money. See, simultaneously, if you notice what happened to the put option. Put option were already decayed by the money. Even if I go to the 26,200 put option, you can see the money was depleted almost 73 rupees. And only if you would have done proper entry, you could have captured how much money? 101 point. From 73 only you got the 78 rupees you got the entry, and how much you are capturing, that too with the proper timing, you have captured only 33 points. Whereas in option writing, you captured 100 points deep in the money, or otherwise, if you would have selected 26,100 call option, not that much money, because already it has decayed. 26,000, yes, you could have done that here, 26,100 call option. in the money or at the money 82 points. You could have done that. And for the added advantage is if you would have thought the expiry is almost on Tuesday, that is next week, the time remaining is very less, and today is December 25th, holiday, everything added together, the decay will be faster. It is an added advantage if you used your brain that holidays are coming in and the premium will decay. The market also started showing weakness. It went up to 26,233. It could not sustain clearly. Clearly, you can see over here around 11 p.m., the market could not sustain. Here itself, the price action it is telling you. If you go to the lower time frame, you can make out in this 2 minutes time frame, you can see weakness trend changing here. Let me highlight this, how you could guess the entry around. If we go to the 2 minutes time frame, let me bring in, see, you are seeing early entry with confidence. With confidence, you could have gone there. Let me make the rolling pivot. I just disabled R1. Yes, R1 is there. S1. Yeah. Why I'm not seeing R1, S1? What happened to them? Yeah, it is above the R1, even in the 2 minutes time frame, and trend has flipped over here. You got an entry, early entry, and the 2 minutes episodic pivot is here, and you are going to take the trade over here with confidence. Confidence breaking below this structure. This is the complete structure, it is breaking below, and safe entry would have been here. You can take the trade, you need not wait for this because you have taken the trade even though here Nifty around 26,000, I mean around 10:30 p.m. it started showing weakness, and what if it comes up? Even though it came up, I'll show you, even though it came up, same call option. Let me go to this call option. 20, no, that is put option. No, I need to go back and take 26,200. Let us go for 26,200 call option. See, say for example, you're around 10 or 10 a.m. or 10:30, you're selling it. Even though price came back and retested, same price behavior. You are getting the premium decay. You are selling here 423 January, and it did not come to that level. Even though it retraced back, it did not come to that level. That is the safest thing because option premium decay will be there, time decay will be there. It will never go there. That safety will be there in writing. Whereas in option buying, second time if it tests, the first time testing, second time testing, there will be a lot of difference between the option premium. Option premium will decay more when compared to the, even though the underlying say test the same level, the option premium will go a little bit. If you consider that, it will be helpful for you people in option buying also. This is the thing, what is happening there. You can do it very safely with this liquid bees and call spread. You can write the option. Credit spread, you can use it. You can, with the safe mode, you can generate income without any tension. So, friends, I hope this video will clarify everything, and you can go and you can create a basket order in the Zerodha or something anywhere in your trading terminal, whichever broker you are using. You can create and you can try with the minimum loss as an experiment with the help of my rolling pivot. You can go for that because why? Why this was appropriate time for writing the option is market become exhausted. I told you if I change the time frame to hourly, you can see the market has risen without any break. See, from there, market one, two, gap up, and you can see the exhaustion over here. Exhaustion over here, 26th and 27th, there is an episodic pivot. Where episodic pivot has been formed, that is, an high volume has been triggered, that is an indication. Episodic pivot will not tell you the direction, but direction can be made out with the help of what? With the help of rolling pivot. These two indicators in combination, you see how beautifully market is going down. Like this, I've gone back to there also you could have done that. Here it is the beginning. Whether you, even if it pops up tomorrow, you need not fear. It will not go there. Even if the market, only the risk is there if the market rallies beyond that. At that time, it may come to the level where you have sold. Then quickly you can do that unless some overnight risk. Don't take overnight risk. You close your position, and unless the market with something, some news, if it gaps 300, 400 points, there comes the risk for your option rating. Yes, friends. So you can do it with this strategy. You can build a strategy, and this is for the beginners also. They can do it comfortably and without any tension, and you will learn the price action, structure, everything slowly when your mind is calm. Thank you very much, friends. Nalnakshi Swami signing off.